Hi, this is you, Michael, a lecturer in commerce, 42 years experience, and I taught for CA Foundation and CA Inter for these 42 years. My phone number is this. I have started recently this YouTube channel. Only few videos came on depreciation and issue of shares. In issue of shares, only one problem I explained around 4 weeks ago. Now from here I am going to release all past year questions with a clear explanation. In this video, I'm going to explain past year question from CA Foundation issue of shares 2021 January. Sixth question in that question paper. Question number is 6. Let's go to the problem. Before going, I expect you have already known something about this company accounts. With that expectation, my teaching will run, not from the basic level. A Limited is a company with an authorized share capital of rupees 1 crore in equity shares of rupees 10 each. Means this is the amount of the share capital. This is the face value of each share. Then you must calculate how many number of shares are there in the authorized capital. 1 crore divided by 10 rupees means 10 lakhs shares are there in the authorized capital, of which 6 lakhs shares had been issued. Means already 6 lakhs shares had been issued means past of past. Now they are going to introduce some past. Now before that they had already issued earlier. The company makes a further issue of 1,35,000 shares. Now at this moment the company wants to issue 1,35,000 shares at a price of rupees 14 each. It means there is a premium included in this because the face value is 10 rupees and issue price is 14 rupees. 14 minus 10 equals to 4 rupees is the premium, security premium. The arrangement of payment being first point, 2 rupees per share payable on application to be received by 31st May 2020. And second point, allotment to be made on 10th June 2020 and a further rupees 5 per share including premium. It means on allotment they are collecting 5 rupees. In this 5 rupees premium is also included. The final call for the balance to be made and the money received by 31st December 2020. Now, this is the proposal. Now, what happened actually? Applications were received for 5,60,000 shares and dealt with as follows. When you received applications for the certain number of shares, you can make an entry for this number of shares. 5,60,000 shares were applied by the public. For this, we should make an entry. When we receive application money, that is debited to bank account because our bank balance increases. So, bank account debit by how much amount? 5,60,000 into 2 rupees. because the application money is 2 rupees. So 5,60,000 into 2 rupees comes to be 11,20,000. The same amount is to be credited to equity share application account. Here I have written in shortcuts, but you should write in the examination in full form. And after that, how this application money is to be dealt with. It means out of this application money, how much amount is to be transferred to share capital, how much amount is to be transferred to allotment, and if any refund is there, how much amount we have to refund. For that, we should make a journal entry, this entry. So how do you calculate the amounts for this? For that purpose, you should open a small table, working notes. You should put working note 1. You make these columns. Applied. You must write shares applied. Because of space problem, I wrote only applied. This is shares allotted. This is excess shares applied for. Now you need to fill these 3 columns. How? Take this first point. 10,000 shares received and allotment in full. 10,000 shares you have to write in the applied column because they applied. They were allotted in full means they were allotted 10,000 shares. They applied for 10,000 and they were allotted 10,000. No rejection, no complication. So here 10,000, here also 10,000. 10,000 minus 10,000, 0. It means there are no excess number of shares applied by them. Over. Take the second point. Applicants for 50,000 shares received 1 share for every 2 shares. It means 1:2. 1 by 2. Applied for. No money was returned to these applicants. The surplus on application being used to the amount due on allotment. It means they applied for 50,000 shares. While applying for 50,000 shares, they must have already paid 2 rupees on that 50,000 shares. Since they were allotted only 25,000 shares, on 25,000 shares, application money is treated as a share capital. Remaining 25,000 shares application money is to be transferred to further calls, maybe allotment or first call, second call, like that. Now, first you have to put this 50,000 in the applied column. Now you need to find out this number of shares. How? Applied is 50,000. A ratio is 1:2, means 1 for every 2. 1 for every 2. This is the number of shares received. This is the number of shares applied. Ratio. That's why we have to take 1 by 2. So when you calculate, you will get 25,000. These were allotted. These were allotted. These 25,000 shares you have to write in the allotted column. Now, if you compare these two, what you will know? These were applied, these were allotted. And what about the remaining? They are called excess shares applied by the second category. That excess number of shares should be put in the third column, excess shares. Okay, up to this it is clear. Now take third category. applicants for 5 lakhs shares, 5 lakhs shares into received an allotment of 1 share. It means in the numerator 1 divided by, for every 5 shares divided by 5 equals to 1 lakh. These 1 lakh shares were allotted to the third category applicants. So they applied for 5 lakhs, that you have to put here, and they were allotted 1 lakh, that you have to put here. Now, if you subtract this 1 lakh from 5 lakhs, 4 lakhs you will get. That 4 lakhs are called what? Excess number of shares applied by them, that you have to put here. After filling these 3 columns, you should take the totals of these. This total came to be 5,60,000, this total 1,35,000, this total 4,25,000. These are applied, these were allotted, these were excess shares. And if you add these two, means allotted plus excess shares, you should get number of shares applied. So whether you have written these amounts correct or not, to check, you should add these two. When you add these two, you should get this figure. Yes, here in this case you got this figure, it is correct. Now after that, what we have to do? You have to take the third column. What is the third column? Excess number of shares. The excess number of shares are to be multiplied by the application money. 25,000 into 2 rupees, 50,000. What does it mean? It means at the time of making the application, they paid extra amount. Why they paid means they thought that they would get all these number of shares, but they did not get all the number of shares. That's why on the remaining shares at the rate of 2, which came to be 5 lakhs, is to be treated as excess application money, excess money. What should we do with this excess application money? Should we return or should we retain? You have to check the question. No money was returned to these applicants. The surplus means extra money on application being used to the amount due on allotment. It means they applied for 50,000. They were allotted 25,000. Now they became the members of the company. When they became the members of the company, on the remaining installments they have to pay money. Like on allotment they have to pay money. On first call they have to pay money. If second call is there, on second call also they have to pay money. So because they have to pay money in future and their money is with us now, we can keep that money with us to use for those amounts which we have to receive in future. It means how much money we are retaining relating to them, that much amount they need not pay again. It means they have paid in advance. You can treat like that. So that application money need not be refunded. That will be kept by the company and it will be used for adjustment to the allotment money. Adjustment means when the allotment due comes, they need not pay allotment money to the extent of this amount, this excess amount. only the remaining amount they will pay. Only the remaining amount on allotment due they will pay. So this process is called adjustment to allotment. Adjustment means we are keeping that money with the company. And after that, what happened? Third one, applicants for 5 lakh shares received an allotment of 1 share for every 5 shares applied for. Here we have already calculated 5 lakhs into 1 by 5, 1 lakh shares. So 1 lakh shares. The excess money, the excess, here money should be given, but no problem. The excess being returned to the applicants. What the company is doing, the money due on allotment was retained. They have some excess money. They means the members of third category. They have some excess money with the company. Out of that excess money, company can retain the amount which is due on allotment, and the remaining amount the company has to refund. That is the meaning. So on the excess number of shares, that is 4 lakh shares into 2 rupees equals to 8 lakhs. In this 8 lakhs, how much amount the company has to retain? Out of these 8 lakhs, how much amount is to be kept by the company with it? How to calculate? For this, what we have to see, how many shares they were allotted, you have to see. They were allotted 1 lakh shares. On this 1 lakh shares, in future, they have to pay allotment money. How much is the allotment money per share? 5 rupees. 2 application, this is 5 on allotment, 1 rupee face value and 4 rupees premium. Remaining balance is on first call. This 5 rupees they have to pay on this 1 lakh shares. So 1 lakh into 5 rupees equals to 5 lakhs. Out of this 8 lakhs, the company can retain 5 lakhs. The difference amount, that is 8 lakhs minus 5 lakhs, is 3 lakhs. That is to be refunded to these members, to third category members. This is refund. Now, like this, you have to prepare a table. After preparing the table, you can write these journal entries. I have not given too many columns, but in books, they suggest more number of columns. Not necessary. This much is enough. Okay, now how to deal with the second entry? Take this amount. This amount. Share application account is credited here. This amount is to be transferred to various accounts. How to transfer? This share application account is to be debited here. By debiting this, this account is closed. This is called transfer entry. This is called transfer entry. Transfer entry. This is receipt entry. Put this amount here, write the share application account, and out of this, how much amount is to be transferred to share capital? That is very simple. How many shares we are allotting in total? In total, 1,35,000. This figure was already given in the question. Here, 1,35,000. On 1,35,000, 2 rupees is to be transferred to share capital. Why 2 rupees? Because it is application money. So share capital account, equity share capital account credited with 1,35,000 multiplied by 2, 2,70,000. Now, remaining amount, 11,20,000 is the total amount received. Out of this, 2,75,000 is transferred to share capital and some amount is to be kept with the company towards allotment due. That allotment due we have already calculated here. How much? That excess application money transferred to allotment, 5,50,000. This figure you have to write here. And the remaining amount, 3 lakhs refund. Refund you have to write here. You got the point? Once again, equity share application money received is 11,20,000. How we are going to use that? Out of this amount, 2,75,000 is to be transferred to share capital on the number of shares allotted. This is number of shares allotted. And out of the excess application money, some amount was transferred to allotment, some amount was refunded. How much money was transferred to allotment money? How did you get this? For the second category shareholders, 50,000 we have adjusted, we have retained. For the third category, we have retained 5 lakhs. 50,000 plus 5 lakhs, 5,50,000. This amount is to be credited here. When you are crediting this allotment account, it means we are not going to ask this amount again from the shareholders because they have already paid this amount along with the application money. It is their money only. They applied excess number of shares. That money is with us. So this much amount we are not going to ask. How much amount we are not going to ask should be transferred to share allotment account. Remaining amount, that is 3 lakhs. How did you get it? This third category applied more number of shares. That's why that excess application money was decided to be refunded. The company has decided to refund it. This 3 lakhs you have to write here. This entry is made on what date? 10/6/2020. What is this date? The date of allotment. Date of allotment means deciding to whom shares are to be allotted, to whom shares are not to be allotted. This date. On the same date, we have to write a due entry for the allotment. Due entry means what? Due entry means we inform the members to pay the second installment, and that second installment is called allotment money. When we inform, we have to create an asset because they are going to pay in future. For creating asset, share allotment account is to be debited. Share allotment account has been debited here. With how much amount? With how much amount? How will you get? How many shares they applied for? So many. But how many they were allotted? 1,35,000. 1,35,000 into 5 rupees. What is this 5 rupees? Allotment money to be paid. This 5 rupees. How much amount they have to pay? 6,75,000. Now, out of this 6,75,000, some amount is towards share capital and some amount is towards security premium. How do you know that? Here there is a breakup. Out of 5 rupees, 1 rupee is towards the face value. That amount is to be transferred to capital, share capital. Extra amount, that is 4 rupees. that amount is to be treated as a security premium. So equity share capital 1,35,000 into 1 rupee, this 1 rupee, and to security premium 1,35,000 into this 4 rupees, 4 rupees. Now you will get 1,35,000 and here 5,40,000. 5,40,000. And after that, this is the due entry. Now we have to make a receipt entry. Here you have to be careful. How much amount was debited to allotment? 6,75,000. Out of this, already retained by the company is 5,50,000. The remaining amount they are going to pay now. So 6,75,000 minus 5,50,000. What is this 5,50,000? They have applied for excess number of shares. On those shares, they have paid application money. That application money has been kept by the company itself. That amount, they are not going to pay this amount again. Already I explained there. So remaining amount they will pay. 6,75,000 minus 5,50,000. You will get 1,25,000. This amount you are receiving. When you are receiving the amount, bank account should be debited, share allotment account should be credited, this allotment account. Now, by passing this entry, allotment account will be closed. Let us check. Here, allotment account is debited with 6,75,000 and here it is already credited with 5,50,000. Here credited with 1,25,000. This plus this is equal to this. Like that, it must be tallied. Both debits total and credits total must be equal. Now, final call. The date on which the final call has been made is not given in the question. That's why we have written here question mark. Whenever you are writing a due entry, which installment you are going to call, that must be debited. Why it should be debited? Because on that particular call, we are going to receive the amount in future. It is treated as our asset. That's why this account should be debited. Equity share final call is our asset. For how much amount? 1,35,000. What is 1,35,000? Shares issued beginning. That is 1,35,000 and allotted into 7 rupees. How 7 rupees? This 7 rupees. 1,35,000 into 7 rupees. You will get 9,45,000. And this amount is a part of the share capital. That's why share capital account is to be credited. We are going to collect the amount towards share capital. Share capital account is always credited. When the company is closed, this amount has to be refunded. It is a liability. That's why that account is to be credited. Equity share capital account credited. Same amount. And after some time, we receive the amount. This is due entry. This is due entry. This is receipt entry. Is there any pending amount in this question? No pending. Entire final call money we are receiving. Entire money means this amount which is treated as asset till now is realized now, means receiving it. So this account should be credited and bank account should be debited because we are receiving the money. So this is the way you have to write the journal entries. If you have any questions regarding this, you just directly call to me. At present, there are no so many subscribers. You can call me, no problem. When the subscribers become more, I may not be able to lift the call. Right now, I can lift it and you can make use of my services. No problem. Okay, thank you very much. I wish you all the best for the coming September exam. Thank you. If you like this, subscribe this channel and share to your friends. I'll be with you. Right. Thank you.